My friends, welcome back to the channel. I want to do a quick little AMC technical update for you. Before we get started with the video, if you're new to the channel, first and foremost, thank you. Please like and subscribe. Do all that YouTube stuff. If you're an old dog, I appreciate you as always. Much love to you. Nothing I'm giving you is financial advice. It's for entertainment, educational purposes only. I just want you to make awesome decisions for yourself, your family, and your portfolio. All right, so let's jump into the video. So on September the 13th, exactly 1 week ago, I tweeted out that we created a gap down. So when it created a gap down, I said be careful of us pushing up to the upside, filling the upside gap before we were going to see a continued push back to the downside. And over this past week, this is 100% played out exactly like I thought it might. We pushed up, we filled the gap to the upside, and then we pushed down, and to the tick, like to the penny today, we filled the gap to the downside. So what does that mean? What are our possible scenarios from here? Well, obviously, let's talk about, the elephant in the room, if you will. We've got the big Fed meeting tomorrow where they're going to be talking about interest rates. My bias is most likely, I think, is going to be the 75, with a forward look at 75 pretty much at every single meeting until until we get inflation under control. I think that what I would like to see is I'd like to actually see a 100-point hike. Now, yes, I think that would really hurt the market right off the bat. However, what I would like to hear is something like we're going to do a 100-point hike here, but then plan on doing 50-point hikes in the future until we get inflation under control. And then hopefully this one hike would actually help get inflation under control. I think the reason you saw such a massive dump with the CPI data, even though it only came in like a couple of, tenth of percentage points higher than what was anticipated, is it was just to show that, like, even with the interest rate hikes that we've been doing, we're still not seeing the inflation come down the way that we want to. So I would like to see them be a little bit more hawkish. And if you don't know what I mean by that, the Fed can either be dovish or hawkish. Dovish is, they're going, easy on the economy. Interest rates are low. Money printers turned on. When they're hawkish, interest rates are going to be going up. Doing what they can to get inflation under control. And like I've said many times before, the reality is we're in this vicious cycle of we go through a process of making interest rates really low, pretty much free money. Inflation starts to get out of control. People are just, they're throwing mortgage loans out there for just practically nothing. And then we get in this cycle where people have borrowed too much, credit card debts at all times high, everything like that. And then you got to go through basically where the Fed puts us into a recession, and then once we've gone in a recession and everything gets under control, then it goes right back to free money for everybody. And so it's kind of like a cycle of working out, if you will. It's like you sit there, all you do is eat, and then you go, dang, I feel fat. And then you go, I'm going to eat healthy, I'm going to work out. You lose a bunch of weight, and then you're like, this sucks, I'm tired of doing that. I'm going to start eating again, I'm going to get fat. It's pretty much the exact same thing there. So I would like to personally see a 100-point hike, which would basically be a full percentage point increase over the 0.75 increase. And I think you would see a big correction in the market, but I think they would digest it. And I think the reason you saw, such a nasty tumble when that happened, like if we come over here to SPY, right here's where it happened, where it just, it gapped down and then pushed down all day back here on September the 13th, is because I think when that CPI data came out, everybody realized, dude, what we're doing is just not getting this under control. So I think a lot of people in the market started going, they might have to get even, more hawkish than what they're talking about with the 75-point hike. So I think, to an extent, you could see the 100-point hike priced in. Now, I still think short term that would bring pain, but then you would see a recovery. But there's no doubt that SPY is at a critical level right now. If you go back here and you look at the support from this chop zone, You look at the support back here, and you look at the resistance that it was also providing on the way up. We're coming down here, and then we are testing that support, pretty heavily right now. There's definitely a lot of selling pressure. Even though you saw the big relief bounce yesterday, the volume was just almost nothing. I told my Discord today that I think you're going to see a lot of selling pressure going into today because the reality is almost nobody is bullish for what's going to happen tomorrow, right? So if that's the case, if you had any type of bullish stances going into tomorrow's meeting, if you were green on the trade, if you were like, I might need to reposition, everything might be on sale tomorrow. The reality is you were going to get out of the way today, okay? I had a couple different, option plays that were green today, and I was like, there is zero chance of me carrying anything over into tomorrow. So that's what my bias was. That's why if you follow me on Twitter, I played puts overnight for a big gap down, which is exactly what happened because my bias was people are going to be wanting to get out of the way. And if anything, bears were going to be wanting to take positions. Now, if you know me, you know I'm a contrarian thinker, and that leads me to go like, well, if everybody's bearish, maybe we get some bullish reaction. So, if we did get a 100-point hike and we saw, a massive push to the downside tomorrow, then there would be part of me that'd be like, God. But we'll see. Like I said, we'll see how it plays out. So I think 75 is probably going to be what happens. That's what's expected. But I like to see 100. But with kind of forward thinking of like, we're going to kind of rip the Band-Aid off. We're going to make it ugly right now. And then pick you up some discounts. Okay? Now, if we go over here and look at the futures chart real quick, last night, kind of same thing. So you had this big macro uptrend, and then when it came back up and it retested it, you essentially, get in here a little bit closer, but essentially what happened was you came in here and you got a double top, double rejection off that trend line, and then you saw a big push down to the downside. So this looks, right now it's pretty much trading relatively flat. This doesn't, honestly, it doesn't really look bearish, and it really doesn't look bullish. It's, it's just kind of chilling and accumulating. You've got, pretty much this trend line would be what you'd be looking to maintain. So if it did, extend that out, if it did roll over and continue pushing to the downside, you're actually on the 1 hour right now. You're on top of the VWAP and the 9 EMA. So overall, looks decent. Nothing too crazy going on. So let's come over here to AMC. So once again, my reason and my bias for this area holding is because if you look at the volume by price, which essentially what that means is the volume is over here on actually the numbers and where it's been traded. So we're at the point of control. I talked about this in my AMC Weekly Outlook video. I go into more in depth in that one. Please go watch that one. But if right here, essentially your point of control is going to be at $8.36. And you can see this big old volume shelf right over here where we're currently sitting is going to be our most likely place to catch a bounce and really find support. And whether or not you're out here in the entirety of AMC's chart, or if I start zooming in, a lot closer, that's not changing. Okay? So that is why my bias was to come down here, get the gap fill. You guys know I've been talking about the head and shoulders that everybody would be, calling for. That's all it was for a few days on Twitter. And I think, I just don't think that it's going to play out. Okay. Now, do I think that further downside is a possibility? Yes. I think the further downside possibility is going to be coming down here and essentially, catching a double bottom on this macro trend line at $8. Now, what we did see today is, like I said, we saw the gap fill, and at the gap fill, we saw, let me turn this off. But at the gap fill, we saw an immediate, decent reaction. So let me go a little bit. Short time from here we go. So to the tick, when it came down and it filled the gap today, so right here at $8.62, then you saw an immediate, push back up towards the upside. So it went from the $8.62 and then immediately popped back up pretty much to $8.79 before it started trading flat. So good news is the gap is filled. Now, what would be the downside? Well, the downside is if we don't, see a good positive trend reaction here, or if we get kicked off of this teal trend, that was our upside teal trend, then it could roll over and come down here, and we could see some more downside at that point in time. So, do I still think, down here that these lows right here were the lows for AMC? Yes. Especially if we can see the overall market starting to improve. Please go watch, once again, the AMC Weekly Outlook video I showed, where it's just AMC is going to struggle if the overall market is struggling. Period. There's no negative beta. There's no get to a point where it makes sense for the shorts to cover, all that kind of stuff. I personally just don't believe that. I think the best case for AMC is going to be the overall market recovering. If you look right here, you can see that we are starting to form a falling wedge. So this is a good sign right here. Let me take the, what's it? So if we look at it like this is a good sign. This is typically a bullish reversal pattern. Now, just like any other pattern, it cannot play out. You could even ping pong up here. If we extend these lines out. Whoa. I like that. I got that. Next few days or so, you could essentially see, some ping ponging around here before you saw a break up, and then, start doing one of these, I mean, that's all very possible as far as I'm concerned. But I do think the majority of the overall move here is done to the downside. Now, like I said, if it comes out tomorrow and they're way more hawkish, so we basically caught and are above the 707, so coming down here to the 786 at the $8.50. I actually really like the way that looks. Okay, so if we push up and then Powell dumps the market towards the end of the day, and like I said, you can see how this scenario would be. So you would see this scenario as it's pushing up, potentially. Overall market is doing okay tomorrow. It's pushing up to the upside. The Fed meeting, I believe, is at 2:30 Eastern tomorrow, but they'll probably announce what interest rate hikes would be before that. And then they go, hey, is it going to be 75 or is it going to be 100 or is it going to be 75 and we're going to look at 100, next Fed meeting or anything like that. Then you see a big dump down here. So coming up to around 885 and then drops all the way down to around this 786 range before then breaking out. Then you might even retest a little bit lower to retest the top, and then you can start moving up at that point in time. So it's not just gap fill and moon, here we come. I've repeatedly said that the IV needed to cool, the Bollinger Bands needed to tighten, and if we look at those, go to the daily, Bollinger Bands. So John Bollinger's theory on the Bollinger Bands is periods of low volatility are followed by periods of higher volatility. So on the Bollinger Bands, what I'm looking for is a period of consolidation where they kind of trade just like this. So what happened after March? The Bollinger Bands widened, we had the big dump, then they had to tighten for a little bit, and we saw the move up. So I don't see this, okay? I don't see just breaking down below this. I see this. I see consolidation in this range. And don't pay attention to the dates, okay? Before you see, curl back up, retest and push back up, or, which I don't think is likely, a curl down. at that point in time. I only see that as a scenario is if everybody's 2008 fractal actually plays out. So what I'm looking for is these Bollinger Bands to continue to just squeeze this little bad boy for a little bit. And then once we get a Bollinger Band break, and like I said, if you want to be bullish when it comes to Bollinger Bands, you want to be above the midline. Okay, so above the midline, we're going to be bullish. I mean, look what happens when you're above the midline and you're pretty much traveling it. You get this type of price action. So if you want to be bullish on AMC, we want to be above the midline on the Bollinger Bands on the daily. What is going to help these Bollinger Bands tighten is this. Low volume. What are we getting? We're getting low volume. I mean, volume was insanely low today, which is, once again, unsurprising leading up to something. I mean, 17 million shares traded. So a low volume consolidation period before a continued push to the upside at the end of the day. That is what I'm looking for. Normally a candle like today would scare the piss out of me, but because it's just a big old bearish engulfing candle, but the volume is just nothing on that deal. So I actually think more than likely what we're going to see is, like I said, I think overall market, be careful. Here's what you need to watch for in the market tomorrow is just a low volume, slow, steady pump to the upside tomorrow leading into the Fed meeting. If that happens, red flag, red flag, red flag. All right? Again, just my personal opinion, but if you're watching this video, that's what you're here for, okay? And that's what you're going to be watching for. So a push to the upside, and then Fed meeting happens, and then super ugly red day going into tomorrow. Then maybe a touch here, and then, we start bouncing. But like I said, overall, I'm just telling you, this is what you need to see. It just has to happen. It's just not going to be tons of volatility going craziness. Once you have a period of high volatility, dadgummit, just deleted my trend line. Ugh. But once you have, let's go look at squeezes, or gamma runs, whatever. There it is. Look how tight it is. That's what she said, right? Look at this. Look how tight it is. Look at this. Look how tight it was. Now, look at this. Look how tight it was before that run. Okay? So, and then once again, here's before March. Bollinger Band squeeze, push up. Bollinger Band squeeze, push up. Bollinger Band squeeze. Who knows? That's all I got for you today, my friends. Thank you if you made it this far into the video. I appreciate you. Like and subscribe, yada, yada, yada. YouTube algorithm, all that good stuff. Leave me a comment. Tell me how much of a grifter and shill you think I am. I love it. Y'all have a good one. I'll see you in the next video.